Hi everyone, today what we're going to talk about in insurance school is health insurance and how it works. So let's take a look at a couple different factors that determines what the cost of care for you is going to be on an annual basis. You're going to have to pay for your health insurance. Either it's going to come out of your check or it's going to come out of your bank account if you're paying it on your own, or if you're going through your employer's group, it's going to cost you something. So depending on how you use your insurance, or if you use your insurance, if you're a relatively healthy individual, oftentimes, maybe a younger individual or somebody that doesn't need to seek care very often, other than going for your annual physical, annual labs that are covered in network at 100%, those types of preventative vaccines sometimes for children are covered at 100%. Pediatrician visits may be covered. Well woman visits may be covered at 100% as well. Sometimes mammograms are covered at 100%, depending on your age and your stipulations that are written into your insurance plan. So those basic well doctor visits are covered by your insurance plan at 100%. So let's say that's all you have. It's just well doctor visits. You go through the year, you don't use your insurance, you're a healthy individual. It may be advantageous for you, all right, to pay a lower monthly premium. Okay, the reason I say a lower monthly premium is this. If you're paying lower premiums for your health insurance, whether you use it or not, when you go to seek care, you're going to end up paying more out of pocket. So you're taking on more responsibility at the time you're going to seek care. Higher copayments, higher deductibles, coinsurance, and I'll explain what this is, where you and your insurance company split the cost of care, and then your out-of-pocket max. All these things are going to be higher when you're paying lower premiums on a monthly basis. So if you're a relatively healthy individual and do not necessarily need to use your insurance, it might be worth the risk, as they call it, or the gamble, as some people call it, to pay lower premiums and take on more responsibility if you have to use care, urgent care, emergency room, non-routine sick doctor visit, where it's going to cost you more money. So let's take a look at the scenario that I want to present to you. Relatively healthy individual, you pick a plan where it's not going to cost you much money out of pocket. All right, so you're paying a monthly premium that's low, but let's say you have to go to the doctor's office. Now, if it's a well doctor visit, we talked about that, that's covered at 100%. Then the doctor runs routine labs, and they're coded appropriately as routine labs. That's covered at 100% as well. Your doctor visit is over, everything's covered at 100%. You're paying low monthly premiums. It's not costing you a lot of money out of your paycheck. It's not costing you a lot of money out of your pocket. Another scenario, same situation, healthy individual paying low monthly premiums, but all of a sudden you get sick and you have to go to an urgent care. And you've got $1,000 deductible. That is your responsibility to pay before your insurance company is going to pay their share. So that's part of what you're going to pay out of pocket. And once you've satisfied your annual, it's not just for an urgent care deductible, it's your annual deductible. Once you satisfy your annual deductible, that's your responsibility. Then it goes to what's called coinsurance, where you and your insurance company split the cost of the insurance. So back to the premium, you're paying lower premiums, but when you seek care, the coinsurance split is going to be a little bit different. All right, you may be in a situation where the insurance is only going to pay 70% of the bill, and you're going to be responsible for 30% of that bill after you've satisfied that $1,000 deductible. That's the cost share. That's your responsibility. Now, part of that cost share that you pay and that deductible that you pay will go towards what's called your annual out-of-pocket max. And that's exactly what it is. It's the most you're going to pay out of pocket for a calendar year, as long as you stay with in-network providers under your health plan. Okay? So lower premiums, it's going to save you a little money out of pocket if you're a healthy individual. But when you go seek care, you're going to probably be paying higher deductibles. If there's a copayment under the insurance plan that you have, instead of maybe a $25 copayment to go see your primary care physician for a sick doctor visit, you may have a $50 copayment. That copayment, along with your deductible, along with your coinsurance, all accumulate and go towards your out-of-pocket max. Okay? So what you want to do is you want to keep track. What do I have to pay out of pocket? If my premiums are low, are my deductible, are my coinsurance, do I have co-payments that I'm going to have to pay for out of pocket that's going to cost me more? And your out-of-pocket max, okay, is going to be a lot higher because you're paying less money on a monthly basis. So when you seek care, it's going to cost you more out of pocket, co-payments, coinsurance, deductible, and your out-of-pocket max. All those things, the co-payment, the coinsurance, and deductible, those all go into the out-of-pocket max bucket. And then once you satisfy your out-of-pocket max for the year, you're finished. And then if you wanted to, sometimes people have elective surgeries. And we're going to talk about explanation of benefits in our next video, and what explanation of benefits are and how important they are for you to actually look at when you do have a claim process. Now let's take a look at a different scenario. Let's say, for instance, you are not necessarily a healthy individual and you go to your doctor quite often. So it may be advantageous for you to choose a plan where you have a higher premium on a monthly basis. Let's say you're paying $400 a month in premiums, but when you go see a doctor, those well doctor visits are still going to be covered at 100%, okay? But it's the sick doctor visits. If you're not feeling well, if you have to go to your primary care physician because you have a fever, a cold, you have bronchitis, you have to go to a pulmonologist or a specialist, those types of things are going to be a little bit more easy for you to deal with. It's not going to cost you as much because you're paying upfront more in your monthly premium. So when you go seek care, all right, you might have a $10 copay to go see your primary care physician for a sick doctor visit. So they're taking their money, the insurance company is getting their money on the front end with your monthly premium. But when you go to seek care, your copayment is going to be less. Or if your plan does not have a copayment and it just goes right to deductible, all right, then your deductible may be a $250 deductible for the entire year. So let's say you go to the doctor, 4 times a year because you're not feeling well, or 5 times a year, let's say, and you've satisfied your $250 deductible, you no longer have to pay any deductible. That's your annual deductible that you've satisfied. Okay, that goes towards your out-of-pocket max. After you've satisfied your deductible, then there's a cost share once again, and that's your coinsurance. But because you're paying higher premiums on a monthly basis, your coinsurance or your cost share is going to be lower, okay? Because you're paying upfront more money. When you go seek care, you're going to pay less out of pocket. So you may be in a situation paying a higher premium on a monthly basis. Once you satisfy that deductible, which is lower again, your coinsurance may be 90% for your insurance company, but only 10% for yourself. And then that coinsurance 10% that you've paid, plus that deductible, accumulates towards your out-of-pocket max. Now, once you've satisfied your out-of-pocket max for a calendar year for in-network services, then you no longer have to pay any more money out of pocket. That's what it is. It's an out-of-pocket max, right? So think about it. It's pay me now, pay me later. If you're paying me now on a monthly basis, you're paying higher monthly premiums for your health insurance. When you go seek care, you're probably going to have lower co-payments if you have a co-payment, a lower deductible for sure, lower coinsurance, that's the split between the insurance company and yourself, and then a lower out-of-pocket max for the year. So that it's not going to cost you as much money, okay, out of pocket. Lower cost on a monthly basis, you're going to pay higher out of pocket when you go seek care. If you pay higher premiums on a monthly basis, when you go seek care from your doctors, urgent cares, specialists, if you end up going to an emergency room, it's going to be less expensive for you to do that. So you just have to decide, pay me now, pay me later. What's best for you? Are you a healthy individual or a relatively healthy individual that not necessarily seeks care or needs to seek care on an annual basis other than your well doctor visit? Then it might be in your best interest to pay lower premiums on a monthly basis. Save yourself the money out of pocket or out of your check because you're probably not going to go see your doctor. It's a little bit of a risk. It's a gamble. That's really what insurance is. You're gambling. You're saying, I think I'm going to be healthy for the year. So I'm going to pay monthly a little bit less out of pocket on my premiums because I'm probably not going to have to go seek care during the calendar year other than my annual visits that are covered at 100%. But again, let's think of the opposite situation. If you're not necessarily a healthy person, if you use your doctor often, if you have diabetes, if you have cardiovascular issues, if you have pulmonologists that you need to see, if you have to go see specialists, if you need to seek care on a relatively consistent basis annually, then it's going to make more sense for you to pay a higher monthly premium out of your check or your pocketbook. And when you go seek care, the costs of care are going to be less for you. Do me a favor, if you have questions in regards to how deductibles work, co-payments work, coinsurance, out-of-pocket max, or any type of insurance questions as far as your health insurance and how that works, in the comments below, please put some questions down there. I'll be more than happy to reach back out either with another video or I'll answer your questions down at the bottom to give you some clarity on how this works. But again, if you think about it, I'm a healthy individual. I don't use my insurance very often. What I'm going to end up paying is low monthly premiums because if I ever had to go seek care, it's going to cost me more money. I don't seek a lot of care. I'm a healthy person, as opposed to if I'm not healthy, I see a lot of doctors, I have a lot of specialists. I'm going to pay more on a monthly basis because I use my insurance a lot and I don't want it to cost me a lot of money out of pocket because I've got a lot of expenses that I need to take care of and I have a lot of doctors I need to see on an annual basis. Any questions, any concerns, by all means, like I said, in the comments section, please feel free to leave some comments, ask me some questions. I'll be happy to answer those for you. If you find this content informative, interesting, and content that you feel that should be shared with other people, the only way that YouTube knows this is if you hit the subscribe button, hit the like button, and set up notifications too. So you know when the next video that I make comes out. The next video, what I'm going to do is I'm going to talk about explanation of benefits. The explanation of benefits are something that comes to you from your insurance company once an insurance company processes a claim after you've seen a doctor or seek care at a hospital or a facility. So we'll talk a little bit more in detail about that. Thank you again for coming back, and thank you again for the question, because this was a question from a friend of mine and they wanted to have some additional information. I thought, you know what, I'm going to put this out there for everybody else to share, and share it with your friends, families, neighbors, whoever you think it might be helpful for. And oftentimes at the end of the year, you're going to have your open enrollment coming up too. And we're going to talk about open enrollment. Good time to think about all these things, what you're going to pay on a monthly basis, what you're going to have to pay out of pocket when you're selecting your insurance plan for the upcoming year as well. So again, thanks again for the questions, concerns, and comments. Please hit that like button, subscribe, and set up the notifications so you know when that new next video comes out for you as well. Thanks again. Bye now.